right, Patrick Francie. We are live on this beautiful Sunday, missing millions. How are you, pal?
I'm awesome. Kicking back, having a cup of coffee. 3 hours before you, by the way. I'm
Well,
early. So
listen, two things I want to make note of. You're definitely kicking back with that old man sweater. I know that's your kickback sweater. I don't know what kind of pants you're wearing right now. I'm not saying stand up, but I'm probably pretty much guaranteeing folks who's got pajamas on. I'm pretty much
you're almost right. You're almost right.
Oh man, that means you may not have any pants on at all.
But it is Sunday, let's face it.
Okay, Patrick, we are talking today about missing millions and raising capital. The number one thing that stops real estate investors from getting in the game is money. Now, at least half the time, maybe even 70% of the time, that's actually a fictional excuse, Patrick. We talk a lot about that in our Winning in Real Estate events. We talk about that in our Real Estate Investing Canada intensives. But sometimes, and not sometimes, but all of the time, it's actually normal for people at one point or another to run out of capital. Actually, I would say, Patrick, the better you are at investing in real estate, the more you run out of capital and the faster that this happens. And this is okay. It's normal. You shouldn't feel dirty. You shouldn't feel dirty to run out of capital and have to go raise capital, Patrick.
I'm a failure. What the heck, Patrick? I'm out of money. Yeah, I think that's true. And, this goes back to, what do we do to raise capital and what gets in our way of raising capital? There's a couple things that I want to talk about on this one. Number one is how many decisions that are being made out there right now in the world of real estate from real estate investors, even homeowners, as a matter of fact, that are fear-based. The decisions to not move forward, for example, or the decision to move forward aggressively. But there's lots of fear-based decisions that are being made. And we talk a lot about, a lot. I mean, every single day we're talking about what's going on economically. And, the mix of headlines, the mix of politics, we've got our own Canadian political environment. And then on top of it, add to that all of a sudden Canada's become this, our mainstream media has become this thing about what's going on in US politics. So I think the general population is so much confusion, so much fear driven. We can't ignore what's happening with COVID and the pandemic. Ontario's talking about locking down, like Toronto's talking about locking down again. I think Montreal already went to a red alert. So there's all this stuff going on. As real estate investors, we're trying to move forward. We're trying to say, well, we still want to invest in real estate. We want those assets, but there's lots of fear out there, JG.
Well, and there's two reasons why this is incredibly timely right now. The first one is, as the uncertainty of the world, the uncertainty of markets, the uncertainty of uncertainty is kicking in. The one thing that you absolutely must be clear on, folks, is investing for your future. Patrick, this is the time, all the things, pandemic, all of the things coronavirus related, all that stuff, it will end up yielding some pretty incredible investment opportunities. We don't believe that they've come yet. We think they are to come still. That's why our summit, November 13 and 14, is so critical for everyone to be there, because we're actually going to be showing you where the opportunities are, where the market cycles are at, which is absolutely awesome. But there will be some incredible opportunities, Patrick. And so that's the first thing. The second thing is people must be prepared. They must be ready. And having access to capital it is the number one thing. You need to be ready when the opportunities strike. You need to have access to that capital. It's not time to start preparing to raise capital. When the opportunities are there, you will have missed it.
There's actually a couple of aspects to that, right? When you're looking for capital, there's first off bank capital. What's going on with the banks? What are the changes that they're making with lending rules, especially when it comes to investment real estate? That's the first part. Second part, as a real estate investor, we all hit the no capital or lack of capital wall. That's a pretty common thing to hit. So where and how do you overcome those challenges that are happening in this particular environment? How do you raise capital and attract capital? And we talk about this a lot. We've done whole programs on raising capital. But ultimately right now, JG, this is what I'd like to kind of talk about. People are looking for leadership. They just are, in general. Okay, they're looking for leadership. If you're a real estate investor that is requiring capital you can be the leader for those individuals who aren't in the know of what's going on economically, who don't understand what it means to look at real estate regionally, who don't know what it means to look at what's behind the curtain, as in, don't just read the headlines. Don't talk about Canadian national averages, for example, and look at the trends that are starting to unfold. So as a real estate investor, having that knowledge makes you a great source of comfort, of confidence, and of knowing what's happening in the market. And so, this goes back to a quote that as far as I know, you own it, which is, the more you know, the less money you need, which is all to say that when you know what's happening, when you're confident in what's going on, when you're looking at the economy and what's happening economically, when you understand the system of investing in real estate, you attract capital, because there's lots of people who don't put in that time, don't understand it, but they can't keep their money in their bank. Peter Schiff says, actually Ray Dalio said, cash is trash, because when we look into the future, you need assets that will support your cash and not have that depreciating money in the bank.
So what we're doing, folks, is we're introducing and we're supporting REIN members and, in fact, real estate investors across the globe in this vein right now. Patrick, we recently introduced, I think it was just last week, our Raising Capital mini course, which is absolutely free. It is awesome. So that's one opportunity for you, gang. And the link is in the description, I believe. So you can click on that, get that ASAP. I don't know how long it's the first time, Patrick, we ever do a free mini course. So check that out. I know we have a free Raising Capital event coming up in October, which is awesome. I know that we have a detailed 60-minute breakout on raising capital at the Real Estate Investment Network Summit, November 13th and 14th. Plus, Patrick, our Raising Capital program is currently 50% off, which is a hell of a discount, an amazing deal. And just last week, you and I did a call, and I love how Mario is his name. Mario says he just bought himself, 22-unit building and raised all the capital, didn't invest any money himself. How incredible is that, Patrick? We hear these stories every day.
We do. And it's an exciting part of being in the education business. REIN, we don't sell real estate. We provide education, we provide research, and we provide solutions for real estate investors. We're also starting to notice how many homeowners are following along, because guess what's happening right now? They're seeing the trends and they're trying to not second guess themselves. What we see is happening. So, I think it was Ford announced yesterday that Toronto's going into, or is considering going into a red alert scenario, like locking down a little bit tighter. And what we're starting to see happen and hear about happening is that, of course, if you're in Toronto and you're living in, let's say you're living in the core or the GTA, you're ultimately going, I want to get out of here. If we're going to be locked down again, I don't want to be in a condo. I need space. I got to be working from home. And so, it's like, the core is draining. It's people are getting out to those suburban areas where they have some space and some freedom should that occur. Well, is that a long-term trend? Is it a short-term trend? Well, right now it's a trend. And so, where you park capital, where you invest in real estate, how you invest in real estate, these are all things that are changing right before us, JJ.
And then what's amazing, Patrick, is that very trend right there, those who follow it, those who know what they're looking for, those who follow it closely, and those who take the right action will actually benefit immensely from that trend. At the very same time, those who don't know what to follow, those who don't take the right action, will actually really hurt their prospects at real estate by following that trend. It's interesting that, Patrick, the trend is the trend. What side of the trend you're on is up to you, but the trend will actually produce huge winners and the trend will produce huge losers. You just want to be on the right side of the track, folks.
Well, it is. And, it's everything. There's so many fear-based things happening and decisions being made, very emotional decisions right now, because there's so much controversy and so many polarizing views of the world, whether it be politics or COVID or what should be done or what shouldn't be done. So there's lots of confusion, which creates fear. And ultimately, what we're trying to encourage people to do is get locked in what's happening economically. And what's happening in Toronto and Montreal right now is far different than what's happening in British Columbia, like as in Vancouver, or in Alberta, in Edmonton, and Calgary, or even, for example, in Winnipeg. I mean, gosh, you look into Saskatchewan and you look at Regina, or you look at Saskatoon, totally different scenario. And here's the thing, is that the municipal politics that are driving decisions are, in fact, impacting and having an effect on real estate and what we invest in, how we invest in that real estate, and where we should be going based on what's happening economically. And that's why it's so important. I think, I think as an executive team, when we were looking at dates for November 13th and 14th for the summit, we looked at it and said, guess what? We need to have some things clear out. First and foremost, the subsidy programs are starting to shift and change. CERB came out, they've rejigged that, but there's other subsidy programs that are now happening. Our federal government, I think it was $600 million that they're doing to SMEs, small, medium enterprises, which are so important to our economy. And so these are things that are happening that we have to pay attention to really know how to invest our capital so that we have a long-term view that support us. Now, back to raising capital, the more you know, the less capital you need, because capital follows that level of leadership, that level of confidence, and that level of commitment, because so few people are putting in the time to understand it, to get the education. And that's why it's really important. So those dates are cool. Plus the election, the US election, which almost seems like our election these days. That's a bit of a button for me.
Yeah, that's a good point. I'm looking at Facebook Live right now. And just so you know, Patrick, so number one, people are digging your look. They like the old man look. If you like the old man look, folks, please leave a like or a comment below. By the way, only Patrick with his muscles can pull off the old man look, so I couldn't, which is all good. The other thing is, what's interesting, a good question here from Aspired is, what's your thoughts on universities getting back to classes? And he's asking in the sense of student housing. Which I think is interesting. I'll go first on that, Patrick, just because I have intimate experience with student housing. There are many different ways to invest in student housing, and there are ways that I actually have one that's one property that does have students in it. And what I want to say is this: there are many ways to invest in student housing. And number one, we have an amazing University Effect report that you must read if you haven't. For REIN members, you guys have all read it. Hopefully you've been through it. It's incredible. The second thing though, Patrick, is one of the approaches that I do get concerned and I'm not a fan of is this approach of getting a bungalow, taking out the basement, building 8 or 9 bedrooms in there and stuffing students in there.
So like a rooming house scenario, right?
Exactly. Mm-hmm. That is a rooming house that happens to target students. That category, that asset class right there, Patrick, and this is why we talk about regionalization and very specific things working and specific things not working. That one I find very, very, very risky right now, and I'd be very careful to get into that business. I'll give you an example. We had a client at Disher Property Management right as COVID hit. Gentleman calls me. I go see his place. And he has a bungalow and he's about to convert the basement into this 8-bedroom setup. So I set him a red flag warning. I said, Patrick, his name wasn't Patrick. I said, Patrick, I would be very careful. And before you go invest $80,000 on top of your purchase price to convert to an 8-bedroom, I'd be very careful. And you actually have a beautiful setup here for a duplex. You might want to duplex it and then individually rent them to students. You're still playing the student rental game. You're just playing it a little differently and, in my opinion, a little smarter. Well, they didn't take my advice. They went ahead. They pumped $100,000 into it. It never rented, Patrick. It never rented. They're still trying to rent it. And if they would, there was a smarter way to do it. So for you, Mr. Aspired, that's my opinion, Patrick, on student rentals. They're not like the category of student rentals is a big category. How you play that game is very important. You have to be strategic more than ever before. And this is why you got to be a sophisticated real estate investor, Patrick, and REIN's a place to do that.
Yeah, I think you make some great points, of course, and you've got that background, but I think it really speaks to real estate in general, right? In any economy, there's real estate opportunities. The economy is the economy. You have no control over that. What you have control over is the strategies that you're going to play into the economic conditions at the time. All part of the real estate cycle, isn't it? Now, when you look at regionalization and you look at student housing, here's a couple things to consider. We're in this time of COVID. Go back to fear. Who's paying for most of the student housing if a student rents a property? Parents. So parents have a say. Now, if you've got an 8-room house, whether the parents buy into it or not, they're going, I'm not putting my kid in that trap.
That's exactly what was happening, Patrick. The kids were doing what the kids were doing, but the parents were saying, no, you're not moving there.
Yep. See this old guy sweater? Okay. That's because it comes with the wisdom of a parent and how I think some parents think, which is they got fear for their children. It's like, protect my child. And I want my child to get the education, but I'm not going to put him in an environment where he risks getting sick. Number one. Number two, we really don't know regionally what's going to happen. At any given time, they're going to shut that university down. They're going to shut that school down, that college down. We don't know. And what's happening, I go back again, what's happening in Ontario is different than happening in every other freaking province.
Correct.
So why increase your risk? Why set yourself up to be at risk? So JG, I'll quit ranting in a second. This is, as a sophisticated investor, our job is to pivot with the economic conditions and use strategies that are applicable to the economic conditions. So that means right now, student housing is a higher risk game, and we want to mitigate risk, not step into it.
And I love that, Patrick. I'm watching the comments here. Razna brings up a great point. Says an SDU, which, by the way, if you don't know, folks, SDU stands for secondary unit. And if you have a secondary unit, which means a single family home with a secondary unit, I often refer to those as duplexes. It doesn't matter. The point is there's 2 units in that building that you can rent out. If you have, say, a 3-bedroom and a 2-bedroom, or a 3-bedroom and a 3-bedroom, or a 4-bedroom and a 2-bedroom, whatever makeup you have, you can still do student rentals there. And Patrick, you brought up a beautiful point. Right now, it is province by province wide in terms of decision making. I believe, Patrick, as time goes on, depending on how long Corona lasts, it will actually become city by city and also sector by sector wide. So the Peterborough campus won't shut down, but University of Toronto will shut down. Right now, they're making these blanket decisions across the province, but it's starting to change already, Patrick. So if you're doing student housing in Hamilton, you may be very differently affected than if you're doing student housing in Kingston or student housing in Peterborough. As an example, that's a regionality, Patrick, that is so critical. You're absolutely right on that.
What have we noticed? We talk about it often, JG, is that, back in the day, oh gosh, so long ago, is that, we were doing live events across the country, and that was cool. We love live events, and, gosh, how many friends and acquaintances and people have we gotten to know over the years? So we love it. But here's what we've noticed is with going in and stepping into technology in a big way like we have, what's happening? Number one, we are literally from east to west. We're from coast to coast. And then that's even expanded now with, who we're attracting. The point of all this is that, as a national organization and attracting a community from across the country, we're hearing and seeing viewpoints and getting insights that are so in the moment, aren't they? Like, it's in real time, we're seeing and hearing things. So we take the research team and what the research team is doing, kind of integrate that with all of the feedback that we're getting from some very, very astute investors, and we can start to put together some pretty accurate views of what's happening in the real estate world.
It's almost, Patrick, like we have our own app that not only feeds all the economic data into it, but then you can overlay actual people experiences from across the country. Wow, wouldn't that make a fantastic app, Patrick? Oh, more on
here we go. Oh no, JG, you can't go on that, dude.
More on that another time.
More than that another time. But the thing about all of this is that, we cannot live in a bubble that says we can't raise capital. We can raise capital now. More than ever, people are looking for a safe haven for their capital. It isn't working in the banks anymore. You get no return on the investment. We know that there's a total disconnect from what's happening economically and what's happening in the equity market, in the stock market. They're feeding it, like they're feeding these largest companies. They're like 5 or 6 companies that drive the whole, stock market, and the government, the feds keep feeding them money so it doesn't collapse. It's a risky scenario. It's a little bit like musical chairs, right?
Yeah.
So where do people invest capital today to protect their capital, hedge against inflation or deflation, like because it works on both sides? So where do they do that? Real estate's there. And when it's done right, it's a very, very effective way. And so if you're a sophisticated investor, if you take the time to get that education, if you take the time to do the research, capital will follow you because they're looking for it.
Yeah, get our free mini course, guys. It's absolutely amazing. That the mini course is a part of the full course, which we offer, which is currently 50% off for raising capital and strategic partnerships. It has gotten mega reviews, Patrick. And by the way, folks, just so you know, the pedigree of that program is approaching 500 million. That's $500 million of capital raised through the knowledge, information, and what's in that program. So someone asked me the other day, Patrick, do you think raising capital works? Yes, it works. It's not whether, it's like it works. It's whether you're going to work it. It's up to you. It's not up to it. It works. It's up to you. So, and we've got some great stuff going on, Patrick. A lot of great free information, the free mini course, the free event that's coming up. If you check out, folks, our events calendar at raincanada.com, there is a free Raising Capital event that's coming up later this month. But our course, Patrick, is the place to go. And also we're doing a breakout at the summit November 13th, 14th. So if you want Raising Capital, folks, you can get it. You just have to put in the work and do the grind, Patrick, which you and I we've been talking more and more about, because it's in these times that real estate is hustle, it's grind, it's boring to some. For you, it's tedious. It's difficult. It's a bitch sometimes, but this is when the money is made, Patrick, if you dig deep.
And it is. And, what I like about the mini course, that free mini course and the free courses that we put on, the free course that we put on in any of our stuff, it's a way for people to dip their toe to go, am I really up for this game? So it's a little bit of risk mitigation. You don't have to spend any money to go, but you can really dip your toe into the water pretty deep. Like it'll take you right up to your knees. And then at that point, you can go, I want to go all the way in, right? The water's not too cold. It's not too deep. I got this, right? And so you don't have to risk your money investing in an education program that you're not interested in. It really is a way for you to decide, yeah, I'm up for this game. I'm going to jump in.
100%. All right. Well, that's that. Folks, thank you so much for watching. I see a ton of you watching live. Please like and share this. We'd really appreciate it. And if you like the Missing Millions segment that we try to do every weekend, we try. We're not perfect, Patrick, but we're trying. I know, right? And so if you like the Missing Millions, please, again, like and share and leave us a comment. We'd really appreciate it. And especially leave a comment if you like Patrick's Old Man Sweater.
Never mind. Hey, so JG, I did that segment on Friday, a segment by myself, just to talk to people about the upcoming summit in November 13th, 14th. Like I went on to do it. I was all by myself, and it was like, oh my gosh, this is like I'm on the dance floor by myself, and now I got to dance. Oh my gosh, I felt the pressure. So it was like, I don't know if I want to do that again or not.
Did you do a break dance? Did you do a break dance?
Yeah, I spun on my head. I did all sorts of trick things. Yeah.
Wonderful. Thanks so much, folks, for watching. Really appreciate that. And until next time, keep investing. And remember, the more knowledge you have, the less money you need for real estate investing. See you soon.
Thanks, JG.